All right, we're live, folks. Hey, guys, everybody, welcome back to Chicagoland Chats. As always, I'm Adam Serwinski, joined by my good friend. I decided to wear the hat today, and he didn't. Butch Zemar. Butch, introduce yourself to everybody.
I'm Butch Zemar. I helped small to mid-sized companies with their health insurance employee benefit programs.
Awesome. And I'm Adam Serwinski with Sidebar Insurance. We handle all of your insurance needs from home to auto to business. If I can't do it, Butch can, and vice versa. So we're here to help you with all that. And as we say always, we are big fans of the community, want to take care of people, give them great advice. And that's why we've connected with Jeff Schmidt from Hoogendoorn and Talbot, a commercial law expert. He's going to talk to us a lot about some of the pressures that are going on for businesses and how maybe they can restructure or work through some agreements that they have to protect themselves to ride out the storm. So Jeff, why don't you introduce yourself and give us an idea of kind of your background?
Yeah, absolutely. So I am a business lawyer at a full service firm called Hoogendoorn and Talbot, as Adam said. I concentrate on representing small, family, and closely held businesses, help them through their contractual needs and with any transactions that they want to do, acquisitions, sales, and succession planning, transferring the business to partners, next generations, or outside investors. So a lot of contract planning, which is what we're seeing now.
So a lot of, just to give also the background, you not only have the law degree portion, but you also have an MBA, right? So you have an extra enhanced degree to help people through understand business.
I do. I have an MBA in finance. It is, it's an interesting addition. Helps me understand financial statements and give a little better advice during actual purchase negotiations and valuations and things like that.
Very cool. So if someone were to walk into a service business or a business that's having some tough times, walks into your office and says, Jeff, I really want to make it through this, but I'm really having a tough time. From a legal perspective, what's the first bit of advice you would offer to this potential new client?
Well, I think the most important advice, and what I try to do is be very practical in my approach and give both a business perspective and a legal perspective. So my clients come to me and they say, look, we're struggling. We're having a tough time with cash flow. Our customers aren't paying us. We're having trouble with our vendors and suppliers. How do we manage all this? So obviously the first thing I want to do is look at the contracts. But before that, my advice to them on a practical level is make sure you are communicating with people. Vendors do not like people who ghost them. Businesses that just kind of get off the radar. They want to know what's going on. And you want to keep in touch with your customers too, because they're having, the same issue when you're their vendor. So the first thing I recommend is that clients are in direct communication with both customers and suppliers, vendors, landlords, whoever the other party to their contracts are. And then we take a look at the documents themselves, try and get a handle on their obligations, what those are, what maybe some of the soft spots are within the contract, some of the looser terms where there might be an opportunity to wiggle a little bit. And even if the contracts are tight, we take a look at what their obligations are and what their business situation is, what their cash flow needs are, and where they are. And then I think it's time to approach the other party and say, look, we're all struggling. I know that you are, we are too. How can we make this work in the short term? And how do we figure it out to maintain the long-term relationship? Because that's ultimately what most people want to see.
Are you finding that vendors and different landlords and different parties are receptive at this time, or are you finding that a lot of them are really running out of cash and don't have the flexibility to be real understanding?
I'll tell you what, the answer to that is kind of multifaceted. It's very industry driven. Landlords have mortgage payments to make and property taxes to think about. And tenants who can't pay their rent, particularly commercial tenants, which is what we deal with, are running into some landlords that are not that flexible. Different industries, for instance, hospitality workers and those industries, restaurants, things, hotels, which we don't do a lot of work with, but certainly restaurants and other service providers that are, operating on a very limited scale, get different reactions depending on what they're doing. For instance, I represent a dry cleaner. People are working from home. They're not using dry cleaners as much, and their business is down substantially. And they've got to work a little bit with their landlord, who is less flexible than their plastic cover supplier. So we still recommend that people are communicating, because no matter what, that's going to add a goodwill aspect to the negotiation.
Hey, Jeff, I know you've talked about commercial contracts, but does some of your expertise go to renegotiating certain types of contracts related to loans or equity of some type, as well as employee contracts?
The answer to that is yes and yes. One of my partners is a very experienced commercial lender attorney and can get involved in the loan documents themselves. I tend to work more with contracts of any other type. So certainly individual contracts, employment agreements, independent contractor agreements. You have a lot of those that are out there, people who are, it's not even furloughed, they're just not being used on an independent contractor basis. And they've got oftentimes agreements with their, the other party analogous to an employer. And those contracts come up all the time too. And again, it's industry specific. I mean, we work with everybody, but the reactions that we're getting and the flexibility that we're seeing very much depends on whether the business is considered an essential business that can keep operating at some level.
Got it. So I guess walking down the line of these independent contractors or even employee agreements, I guess maybe not what's currently going on, because you mentioned it's all over the place depending on industry, but do you see any future or like any changes coming up because of what we're going through today with some of those contracts, whether they're 1099 independent contractors or some of the employee agreements, if they ever had to get furloughed or if there was a length of time? Do you think some of those contracts would be renegotiated for terms for situations like this?
I think so. What's interesting, it's kind of a side note, but oftentimes there's what's called a force majeure clause in a contract, and that essentially suspends the obligations under a contract, in certain circumstances, frequently kind of what you would think of as an act of God. We are seeing that a lot of contracts exclude pandemics from that, and so the approach is that their obligations continue. So back to your question, what we're seeing a lot of is employers who are looking to terminate employment agreements long-term and shift to an independent contractor model that has more flexibility and ties the work obligations and the payment obligations to more situational needs and not ongoing employment that is a payment obligation and an employment obligation and a benefits obligation, irrespective of how much work is available to do. So yes, there's a shift, and people long-term are looking to transition to more flexible arrangements.
Let's dig on that a little bit, Jeff, because obviously there's a kind of an odd way that the law, I think, handles the independent contractor as opposed to the employee and the obligations that are established. What are some of the pitfalls of a business who's trying to make that transition from maybe having the normal and standard employee agreement to this independent contractor transition? What things do you advise clients to make sure they have in line, or what things can you create for a client to help better delineate the employee versus an independent contractor relationship?
Sure. Where an employer has an employment agreement with an actual employee who works for the employer full time and has a contract with them. Typically, they're higher end employees, they're executives, even C-suite employees, and they've got a variety of benefits obligations and even severance payment type obligations that you might not see in an independent contractor agreement. So when I'm advising employers, and some of my partners are very experienced employment law attorneys, and have written books on this subject. When I'm advising employers about that, I say, look, you've got obligations here that are continuing, and if you're going to pull the plug, you may very well have to fulfill this severance obligation. Oftentimes these contracts are well written and there is less wiggle room. And of course, people who are facing downsizing and furloughs and other things are looking to their contracts to make sure that they continue to receive their benefits and get paid. So as I'm transitioning or advising people to transition, to a different model, the primary thing that we're looking at is to tie compensation to work. And so you are, as an employer or as a company, looking to create contracts that delineate what an independent contractor is going to do over time and tie those payments to the actual work or production or whatever it may be. And that can be, again, across industries, whether it's a landscaping company that I represent or a dental office that I represent that has contracts with various dentists, employment agreements where they are expected to be there full time and are paid regardless. We're looking at new models to get them, to get the employers freed up a little bit from continuing obligations in the event that work is down, production is down, contributions by the employee or the contractor are down for whatever reason.
So now, Jeff, continuing the conversation on transitioning to independent contractors, I know in the past, and I think it still exists today, is there's an element of control that's an issue when you switch from a W-2 employee to a 1099. And so with that, maybe you have some comments about watching out for some of that, because just by switching them 1099 doesn't get the employer off the hook off of certain legal obligations, such as workers' comp in one regard, as well as other state requirements that are involved. Maybe you could comment on that.
Yeah, that's absolutely true. It's a great point, and it's something that we always advise our business clients to be aware of. The distinction, to build on what you were talking about, between an employee and an independent contractor is largely related to how much control the business has over how the other party performs their work. And that goes to not just the way they perform their work, but when they do it, kind of at a more granular level, how they do it. And you're right, it does not get the business off the hook for some of these other obligations. And it's very important to make sure that as you're examining these contracts and shifting them to perhaps different models, that you're still in compliance with a lot of these requirements. And workers' comp can be a big one. There are a lot of penalties involved there. I'm not a workers' comp attorney, but as part of these contracts and this advice that we give our business clients, you do have to make sure that you're complying with these other things, because there are a lot of penalties out there. Attorneys' fees can be awarded, additional damages can be assessed, and you really have to watch out for some of those things. And we try and be very cognizant of that in our advice and very thorough about the way that we approach these things. And that's why we get involved with other trusted advisors, and you guys are perfect examples of that. We try and be a resource for our clients and not just advisors about business issues and contract issues and transactional issues. We really try and bring in a team of experts so that we're getting the best advice when it comes to those kinds of benefits questions or insurance questions for landlords, for instance, or maintaining liability insurance or E&O insurance or whatever it may be. We work very closely with accountants on tax issues because those continue to come up. When you're paying a 1099 employee, you need to have it set up right. Make sure that the tax arrangements are changed from a W-2 employee to a 1099 independent contractor. All those things are very important, and we try and really make sure that we bring in the right team of advisors so that we know what we don't know, and we want to make sure that our clients are fully protected.
So we've talked a little bit about the ways that people can kind of get through this, the transfers that maybe transformative ways you can maybe look at employment or independent contractor roles. We also talked a little bit about reworking deals between vendors and clients and working on ways to kind of improve that relationship. But there's also maybe a little bit of house cleaning that people can do during this time, or business owners can do during this time, whether it be looking at their business or organization documents, or looking how their what's the word I'm looking for, when they're passing on the business to someone else, perpetuation planning,
succession
planning, buy-sell agreements, things that they maybe in the hubbub of the everyday business may have a little more time to address with that. What are some things that you think, given some changes in the laws over the past several years, that companies should be thinking about, whether it's moving from an S Corp to an LLC, or their perpetuation planning seems to be a real big blind spot for a lot of the clients that I deal with. Give us some insights as things that maybe they may be able to check the box, and how you could help them with that during this kind of slower time.
Yeah, it is absolutely the time to focus on housekeeping. One of the things, and I'll come back to your question more specifically, but one of the things that, really comes up early in every conversation is cash flow. So one of the ways that we talk about increasing cash flow is by cleaning up expenses, cleaning up your internal operations. As you do that, you're going to want to, as a business entity, look at your organizational documents and make sure, a lot of people, entrepreneurs, small businesses, they go out and they may not engage an attorney, or they may not want to pay for continuing advice. They may form a company and either say it's an LLC. They may not create an operating agreement, especially for solo folks who just have a single member LLC. There may not be an operating agreement involved. They bring in another owner, an investor, a partner, another shareholder in an S Corp, and they don't have what we call governing documents that control the relationship between those parties. Now is the time to take a look back at that stuff, get it all in place, and make sure that the owners of the business, the investors, whether they're active players in the business or silent partners, passive investors, you want to make sure that you have that laid out, figured out, agreed upon, and operating smoothly. Getting to your question regarding succession planning, a lot of that is done depending on the nature of the organization. So in an LLC where you have an operating agreement as your governing document, you typically address succession planning in their buyout provisions, rights of first refusal for one party to buy out another. If somebody wants to sell, they kind of get first dibs. With an S Corp or even a C Corp, you may have bylaws that govern the day-to-day operations and some of the more significant decisions, who are directors, what kind of issues require, say, supermajority voting as opposed to majority voting. Often those relate to selling the business, taking out a loan over a certain amount, spending a certain amount, doing whatever. Those kinds of things, as I said, are frequently all addressed in an operating agreement for an LLC, which is typically a more flexible form of entity and a more streamlined document, more streamlined paperwork for the company. In a corporation setting, typically you would have what's called a shareholders agreement or a buy-sell agreement that deals with some of those issues, deals with governance at a big picture level, and certainly deals with succession planning. And I'll get into, for example, some of the transactional work that I do involves either selling the business to your partners or other investors within the company already, perhaps planning for the transition of a company, whether it's an S Corp, an LLC, or whatever, transitioning the company to the next generation. You may have children that work in the business. You may have children that do not want to work in the business. You may have a mix of those. How do you do an equitable transfer that treats each member of the next generation the way you want them to be treated? And so when you're looking at these things, you want to make sure that you've thought them through now before it comes time to do that stuff. That particularly applies to issues regarding transfers to existing investors, existing owners of the company, and intergenerational transfers. But it also applies to sales to third parties, acquisitions of competitors, any kind of transaction that you want to do. You want to have your internal governing documents in order so that you know how that's going to work. You know who has the opportunity to participate at what level, and you are poised to pivot and take advantage of opportunities that are out there in the market today, as well as opportunities to transfer all or a portion of the business and your wealth to either your partners or, particularly in the case of intergenerational transfers. I'll touch on for a second estate planning. I'm kind of pivoting from the corporate work that we're talking about, but it's a very related topic to the succession planning that you brought up. As you are taking the time to do some housekeeping, you want to be thoughtful of what you've got in place for transferring wealth to the next generation or to charitable organizations or whatever. And when you are looking at the value of the business that you own, you want to be mindful, getting back to the shareholders agreement or the operating agreement, of how that's going to work, whether there are planning tools that you can use to transfer wealth but maintain control of the organization for a period of time, or there are a variety of other considerations. And we try to bring the full package to the analysis so that people are thinking through these issues now while they have time to do it.
One of the things, basically, I just want to reaffirm a lot of the things you're talking about, maybe give it to us, to the people who are listening, in a tangible sense. So if you started a business 10 years ago and you maybe thought it would take off, but it's really grown into something, the valuation and the way you wanted it distributed before may not fit today. And you're able to actually revisit those documents and maybe reapportion, realign, or even reset the amounts or the calculation, correct? For the ownerships to be distributed, for the decisions to be made. And also, to just add another point too, is if someone wants to buy, they want to know how the process is going to go, and having clear documents can both help in those transitions with growth, or with situations where everyone's want to buy, give them stability to make you more attractive.
That's right. Valuations have obviously changed a lot, even over the last 6 weeks, right? I've had a lot of deals where, you had negotiations in place for someone to purchase a company at, X valuation, and they're now operating at a 25% capacity, and the value of the business has tanked. In organizational documents, there are, a variety of ways to set that value. There can be a set purchase price within a shareholders agreement, or an operating agreement where, one of the partners or the next generation, or whoever's involved in the business, knows what they're going to pay. It may be tied to fair market value, which is a problem in a market like we're in, where fair market value has, declined in a very unpredictable way, and where no one could have really planned for it. It may be tied to a multiple of revenue. Revenues are, so far down that getting the multiple that you thought you were going to get is just not an option. So the important thing is now to revisit those documents, to think through the ways that you want to do that, so that prior to engaging in a transaction, you know what that's going to look like. And both parties know how they're going to get to a valuation, how they're going to get to a purchase price. Now's the time to figure that out.
It should be definitely reviewed often. I know Adam and I, being in the space that we're in, we're always telling them they got to reevaluate things, because nothing's the same as it used to be. And maybe at one point in time there was anticipation of certain things, and those weren't coming true. And so even comes down to, like you were saying, selling the business. You may not get what you thought it was worth. To maybe the terms aren't there, and maybe the revenue isn't where it should have been, or maybe it's more. And so there's a lot of things that you need to constantly keep updating, obviously outside of just now, but this is a good reason to.
Yeah. We want to be, as I said before, a resource to our clients. And this is a tough time for everybody. And at this point, people are scrambling a bit, whether it's, with their customers and vendors, like I talked about before, or in the context of a transaction where there may be valuation issues or other acquisition issues or sale issues. The problem with a lot of clients is that they are very good at what they do, and they concentrate on what they do. And as a result of being good, they have grown over time, but they haven't revisited their documents. Obviously, I'm biased, but I think that people should be revisiting a lot of things with their team of advisors on a regular basis. That includes the corporate documents. You don't want to just get to the point where you want to sell the business, transition the business, and have to clean up all your annual reports and the minutes of the company, and figure out what was done before and how to approve it and things like that. But you also want to be keeping up with your insurance. You want to make sure that your benefits are correctly done, correctly structured. You want to make sure that your, Adam, for instance, you want to revisit your insurance policies, make sure your limits are set correctly, and are appropriate for the situation that you're in. When it comes to my business, people tend to put that off. They tend to say, I'm growing, I don't need to worry about this stuff right now. And it's easy to do. I'll give you a simple example. People bill their customers with an invoice, right? And it's probably a one-page invoice that says, here's what I did, here's what I'm charging, here's what you owe. They may not have thought through things like payment terms, or interest charges on unpaid bills, or provisions that allow for the collection of attorney's fees where you have to sue somebody to get paid. Those can all be included right in an invoice, right in a one-page document. People create those things on a Google Doc and send them out to their customers and get paid over the years perfectly well, because they're doing great work and they're good at what they do and they don't have problems. And then a situation like this hits, they're not getting paid. If it's a big enough problem, they have to perhaps engage in litigation. You want to know where you're going to be allowed to sue somebody. You want to know what law is going to govern. Is it going to be Illinois law? Is it going to be, say, Michigan law, if you're doing work in Michigan, by way of example? And are you going to be able to recoup your attorney's fees when you have to pay a firm like mine to go collect unpaid bills?
Yeah, there's a lot to think about. There's a lot people are taking advantage of it. Jeff, Butch, do you have any more questions before I always like to throw it out there?
No, I think thanks for putting it together and trying to summarize some of the things that business owners should look at when it comes to contracts and transactional business.
Yeah, this has been great. There's myriad issues that you brought up, I think, and touched on. Why don't we, before we let everyone go, we want to obviously give you a chance to lay out your contact information so people who watch this want to engage with someone who's provided such great value to the community, and then they can reach back to you.
Yeah, at this point, we are open for business. We are literally available. But frequently, and many of us are working remotely, the best way to get in touch with me is either via email at jschmidt, SCHMIDT, at htlaw.com, or you can actually use my mobile phone, 773-332-6631. I give that out freely and encourage people to use it. Even though we're on Facebook, I might be overextending myself with that, but hopefully the people who are looking and listening to this are able to get in touch with us and are thinking about ways to do that now in a proactive way.
Awesome. Well, thanks again so much, Jeff. We really appreciate your time and all of your insight. It's been really enlightening. I think it's given a lot of business owners some things to think about, as well as some things to act on in this little bit of an awkward time. So we'll be sure to reach out to Jeff if you have any questions about law. Thanks again for joining us in Chicagoland Chats. Butch, really appreciate your time.
Thanks. Thanks, Jeff. Thanks, Adam.
We'll
Thanks
see everybody
to both
tomorrow.
of you, and look forward to chatting again soon.
Sounds good, buddy. Have a good one.
You too.
Thanks.